What's happening, y'all? What's happening? Look, tonight I ain't just gonna talk about the news and shit. I'm gonna let you know how the news turn into money, okay? How the news turns into losses too, depending on how you move. This is the Ironworth Trading Show. I'm your host, Coach Price. I appreciate y'all for tuning in. Let me let some people come on in before I get started. I'm gonna share the live out. Give me a second. All right, so as y'all know, we got a lot of stuff going on towards, right before the New Year's happened, but we're going to talk about how most people consume headlines and like it's entertainment, right? They'll scroll, they panic, they get excited, and they argue in the comment section. Then they press buttons in an app like they ordering DoorDash thinking that they trading, right? And they confuse why their account look like a fucking crime scene. Now, this live is not for people who want to, just hear what I got to say. This is for people who want a system. You actually want a system. A system is going to be the difference between being lucky in the market or actually having a repeatable process, right? So luck is what you call it when you don't understand why it worked. Actually having a repeatable process, right? So luck is what you call it when you don't understand why it worked. All right. So when you don't understand why it worked, a system is what you call it when you can explain why it works and why it fails. Okay? Come on in if you need a system and you tired of being surprised by shit that you swear you knew was coming. Come on in. Come on in, ladies and gentlemen. Now, because the world is full of people who want to hear one sentence and think it's a contract, right? This is educational. This is not financial advice. This is not tax advice. I'm not your personal advisor. You haven't paid me shit to do nothing. I'm not your tax professional, but I do teach how the machine works. You decide what to do with your money. If you need personal guidance, then you do what you need to do. I'm here to make you smarter, not to make choices for you. Okay. So I'm going to say one more thing up front because tonight is some shit that I got to talk about. We're going to go over conflict risk. We're going to talk about how the metals is going crazy right now. We also going to talk about crypto and taxes. All right. And AI and the infrastructure. We got a lot of shit to go over. But I'm going to promise you something. I don't like to promise shit, but this is my promise. If you stay with me, you're going to leave with the ability to do one or four things, right? You're going to be able to stop falling for fake shit, fake market news. All right. Like we got shit going on right now that's not so fake, but I still want you to pay attention so that you don't get caught up on the ass end of anything. All right. We got shit going on right now that's not so fake, but I still want you to pay attention so that you don't get caught up on the ass end of anything. All right. So you're going to be able to have a repeatable frame. So you're going to be able to have a repeatable framework that you can use in about 6 hours. Next week, next year, without you won't have to beg the internet for confirmation no more. And if you're new here, hit the my live, and I don't give a fuck. My live, and I don't give a fuck if y'all like the live or not. But what it does is pushes me out to a larger audience. Okay, it gets me on the For You page. My live, and I don't give a fuck if y'all like the live or not. But what it does is pushes me out to a larger audience. Okay, it gets me on the For You page, right? And I would highly appreciate it if y'all come in, you know what I'm saying? If you're going to sit and get the information, soak this game up. The market don't move because you feel some type of way. Hear me out. It don't move because you feel some type of way. It move because you feel some type of way. It move because money is literally positioned somewhere. And then new information will force that money to move. That's why we care. So remember, your job is not to predict the future. It is to stop being confused about the present, right? So I want to teach y'all about positioning, because if you ever been right about the news and you still lose money, it's because you don't understand positioning. So this is the part that don't nobody explain and shit. People think if I'm right about what's happening, I'm gonna make money. No, it don't work that way, right? If you write about the headline, just because we see that we got news going on and you think the market finna crash and shit just because of the news, you could be completely fucking wrong. You could be right about the headline and still lose money because you entered at the wrong time and you probably used too much on that trade and you probably didn't have an exit or you got chopped up in the middle of volatility. So tonight we are going to build a framework that'll force your brain to slow the fuck down, right? You'll have this framework. It's going to be simple enough for any of y'all to use. Say it with me. Headline, channel, instrument, risk plan. That's how I'm finna break this shit down to y'all. Headline, channel, instrument, risk plan. What the fuck do I mean? If you skip the last part, you are not trading. You are donating money. All right. So headline, we got one right here. The headline is what happened, right? What is being claimed right now? What is confirmed? What's the date? What's the source? I don't give a fuck about you saw a post. We're not going off what somebody said. What happened and how is this going to affect the stock market? How can I make money from this information? That's what you need to ask yourself every time you see a headline, a tweet, you know what I'm saying? Some shit like that. It makes money if you pay attention. Now, channel is the pathway to money. Channel is the pathway to money. The channel is the mechanism, ladies and gentlemen. Rates, energy, supply chain, volatility, policy. You know, that's the channel. Currency flows. That is the how does this actually hit the economy and the market part. So instruments is what people actually trade. Whether you in the stock market, some of y'all trade futures. Drop in the comment section what you trade. Do you trade stock options? Do you trade futures? Or do you just buy and hold crypto? Let me know. Let me know. How do you trade this information? Are you in the stock market? Aiden said he trade everything. So if you could jump from headline straight to whatever you trading, you skipping the most important thinking part, right? So the risk plan is what the fuck you need to pay attention to. This is how you survive being wrong in the market. And your position size. How much did you just put into that trade? You only got $5,000. Why would you put $3,000 on that trade? This position sizing, it matters. Even for people that trade crypto, that shit, it matters. You need to pay attention to your exit, your time horizon. Okay, that means how long do you plan to even be in this trade, right? How long do you plan to be in it? Because shit happens. And when you hear the news, how do you take this information and shit happens? And when you hear the news, how do you take this information and monetize it? But you need to pay attention to also when you are fucking wrong, ladies. You take this information and monetize it. But you need to pay attention to also when you are fucking wrong, ladies and gentlemen. Don't be delulu. When you admit you wrong and you get out, that's a good thing. I don't want you to be in there hoping that it's gonna come back and then you'll literally get out, right? So most people go, they see the headline and then they go straight to trading. That's where they always late on the information. They always emotional. They always confused. They did not translate. They didn't do what they were supposed to do, ladies and gentlemen. Yeah, they didn't do what they were supposed to do. All right. So if we're gonna fix another thing that keeps people broke, we're gonna go straight for that. People don't know what's real and what's social media and what is some shit that's just social media telephone. That's what I call it. Okay. So how do we know the difference between real news and social media news. Real news usually has a primary source. It has a named person, a document. We're going to see clear dates, clear numbers, right? Real news is written carefully because lawyers exist. Social media news is dramatic. All right. They be overconfident. They missing some information, right? There usually ain't dates attached to it. And it spread faster than it get verified. So if the headlines sound like a movie trailer, it most likely is. Be very suspicious of shit like that. So I'm gonna say a headline style, and I want you to pay attention and I want y'all to tell me whether it's a real news or whether it's social media news. So if y'all see a headline and it say breaking news, the market is about to collapse. Is that real news or is that social media news? Let me know in the chat. If you see a post and it say breaking news, the market is about to collapse, is that social media news or is that real news? Well, I think we done had a long ass weekend, right? A week without trading, and people are putting their money where they they still trading when the stock market closed. And crypto going down. So where would their money flow to? Where would I put my money at if I can't trade in the stock market and crypto is down? I mean, shit, I should be buying crypto. Really, should be buying crypto. No, I said buy crypto. Face that. No, I'm just playing. But no, for real though, dead ass. You got to know the difference between fake news and real news. So if somebody say exchange raises margin requirements effective and then they say as of February the 3rd, that's real news. If they letting you know a date. Government imposes licensing requirements starting February the 19th. That's real news. That could be real news. It came from a primary source and they got a date on it. Like just notice what I'm teaching you. I'm teaching you how to avoid getting embarrassed and broke at the same fucking time. Now, the next thing, every headline gonna fit into a category, y'all. If you don't categorize it, you can't respond to it. What are you watching this week? Everything big man coming, aka the S&P 500. Now, this is what I really wanted to go over right now because, let's see. Let's see. That's what we got going on right now. What markets actually do when people start screaming war? That's what I want to last about 12 fucking days. And it was over with. Who remember when it lasted about 12 fucking days? And it was over with. Who remember when we went into war earlier this year? I tried to tell my pops about this shit. He said, we've been in. Who remember when we went into war earlier this year? I tried to tell my pops about this shit. He said, we've been at war. No, I mean, yeah, but dude, Iran just declared war though. This is a little different, pops. Conflict head makes people do two stupid things. You watching oil, big man, you trade futures. But yo, when y'all see headlines like this, it make people do two stupid things. They either panic things. You watching oil, big man, you trade futures. But yo, when y'all see headlines like this, it make people do two stupid things. They either panic sell, right? They sell out of panic. They scary as hell. They panic sell. They panic sell shit that they do two stupid things. They either panic sell, right? They sell out of panic. They scary as hell. They panic sell. They panic sell shit that they should be holding for the next 5 years. I shit you not. And then they revenge buy. They revenge buy some type of war trade that they saw in the comment section. They go buy a Boeing or some shit. But both of them is emotional and expensive. Name your favorite stock in the energy sector, big man. I'm not going to keep calling you that either, brother. Name your favorite stock in the energy sector, big man. I'm not going to keep calling you that either, brother. But yeah, they sell shit or they buy shit they shouldn't be buying. So what we not doing? But yeah, they sell shit or they buy shit they shouldn't be buying. So what we not doing tonight is emotional shit. We getting technical and mechanical with it. We gonna nerd the fuck out, ladies and gentlemen. To fully nerd the fuck out. So I'm gonna clean up a phrase that's been going around because I'm not letting you ruin your credibility. Not on nerd the fuck out. So I'm gonna clean up a phrase that's been going around because I'm not letting you ruin your credibility. Not on my watch. People keep saying Iran declared war on the United States, right? The accurate way to say this would be Iranian leadership has used language. People keep saying Iran declared war on the United States, right? The accurate way to say this would be Iranian leadership has used language describing the situation as an all-out war, right? Why does this matter? Because they move in the market. We don't need a signed document for the money to reprice, ladies and gentlemen. The money will reprice when the probability of disruption changes. And that's what we're dealing with right now. We're gonna define the main word that runs reprice when the probability of disruption changes. And that's what we're dealing with right now. We're gonna define the main word that runs the entire conflict segment, and that's called risk premium. Risk premium is the extra return that you holding something uncertain or dangerous. When the risk goes up, people demand more return to hold risky assets. You gotta pay me to hold this shit. Borrowing is dangerous. When the risk goes up, people demand more return to hold risky assets. You gotta pay me to hold this shit. Borrowing can get more expensive, and especially when the volatility rise. So money rotates towards what feels safer. This is not politics, this is math. Volatility rise. So money rotates towards what feels safer. This is not politics, this is math. Money is going to move to what benefits from the risk. And when you hear conflict escalation, you don't pick a ticker like it's a fucking a lottery ticket in a gas station. No, you wanna run the map. Channel 2, I'm gonna look at shipping and choke points. I want to look at the defense and security spending, currencies and flight to safety, inflation expectations. If you can't tell me which channel is most direct, you are currencies and flight to safety, inflation expectations. If you can't tell me which channel is most direct, you are not analyzing, you are reacting. You reacting. Energy is often the first domino because modern life runs on what? Fuel. Energy is often the first domino because modern life runs on what? Fuel. So usually somebody said they was watching the energy sector. I don't blame you. I don't blame you. This is not my opinion. We literally need fuel. If the market thinks that somehow be disrupted, the price will move. Prices will move before supply is actually disrupted, ladies and gentlemen. That's how we benefit from move before supply is actually disrupted, ladies and gentlemen. That's how we benefit from any piece of information that we hear, but mainly the real information and not the bullshit. This is important because bullshit. This is important because markets are forward looking and sometimes they forward panicking too. They get scared for no reason and shit. There ain't even nothing to be worried about sometimes. Sometimes there's a lot of shit to be worried about and we're not worried. We buying in the moment we really should not be, or selling in the moment we really should. But we know that energy affects transportation costs. Thank y'all for coming in. I appreciate y'all for coming on in. Hit the follow button if you're new here. I got a lot to go through. Tap the screen, you know what I'm saying? While I'm yapping, I need y'all tapping. It pushes me out to the For You page. Now, button if you're new here. I got a lot to go through. Tap the screen, you know what I'm saying? While I'm yapping, I need y'all tapping. It pushes me out to the For You page. Now, we know that energy affects transportation costs. It affects manufacturing costs. It affects food costs. And it also feeds inflation expectations. It affects manufacturing costs. It affects food costs. And it also feeds inflation expectations. So when energy spikes, it's not just oil is up or its cost is up. Cost can mean margins are being squeezed. It can mean inflation risk is up. What is inflation risk? The risk of us, motherfucker. Like when that's up, that could change what the central banks might do. They change rates, the rates change the valuation changes the stock price. You made money. But bada bing, bada boom. It's somebody said today, they was like, oh, the stock market is not rocket science. But bada bing, bada boom. It's somebody said today, they was like, oh, the stock market is not rocket science. Nah, it's not. It's not. It's market science, though. There is a science to it. Energy is the headline that becomes inflation. Inflation becomes is market science, though. There is a science to it. Energy is the headline that becomes inflation. Inflation becomes rates. Rates become the stock prices. This is how we make money from the shit that we hear in the news. Tap the screen. Shipping is another one of them things that you need to pay attention to. Is this dealing with shipping, right? Shipping is the quieter channel that people ignore until it hurts your fucking. Is this dealing with shipping, right? Shipping is the quieter channel that people ignore until it hurts your fucking portfolio. You got Tesla is dealing with a choke point right now. Choke points matter because global until it hurts your fucking portfolio. You got Tesla is dealing with a choke point right now. Choke points matter because global trade is not magic. They dealing with routes, insurance, ports, and timing. So when shipping risk rises, freight cost rises. They delivery timelines get fucked over. The margins get squeezed. So a beginner hear this shit, they hear a war headline, then they buy some random shit, right? But me, when I hear a war headline, I'ma ask. The margins get squeezed. So a beginner hear this shit, they hear a war headline, then they buy some random shit. Right. But me, when I hear a war headline, I'm going to ask, how does this affect logistics? How does this affect insurance, supply timing, cost? I'm looking at all that. I'm like, this is how you nerd the fuck out for real. Even insurance, supply timing, cost. I'm looking at all that. I'm like, this is how you nerd the fuck out for real. Even defense. I ain't talking about basketball, football defense. Defense is a channel too. This is one that everybody run to because it's fucking obvious. Government contracts and budgets and shit can come out of nowhere whenever threats pop up like this. Government contracts and budgets and shit can come out of nowhere whenever threats pop up like this. But amateurs get wrecked because they buy late and then they buy news. They buy news. They hear some shit like this and then they go to trying to buy Boeing or Lockheed Martin, because they think they see a headline, then they buy right after that. Then they get chopped and screwed. And when the markets cool down, by then when they realize it was too late, it's too late by then. Yeah. So whenever some shit like this pop off, by then when they realize it was too late, it's too late by then. Yeah. So whenever some shit like this pop off, the defense sector is not a cheat code. It's just a sector with cycles, politics, budgets, and time. And the rule isn't all defense. Whenever some shit like this pop off, the defense sector is not a cheat code. It's just a sector with cycles, politics, budgets, and time. And the rule isn't all defense always wins in the stock market. The rule is risk changes priorities. Because of what's going on, that changes what the fuck I'm gonna do. Then you watch how the money rotates, because currency moves on fear and confidence. You got to learn that. Yeah, the market is not here to validate your feelings. They are here to price the risk. Now what should you expect? You shouldn't expect one outcome. You should expect a range of outcomes. That's how we think as adults. Okay? Whenever we're dealing with shit like this, you should expect higher volatility. There will be a lot of volatility today in the stock market, and you can see it right now in the futures market. volatility. There will be a lot of volatility today in the stock market, and you can see it right now in the futures market. We're going to see faster moves on these headlines going into 2026. There will be more risk of gaps, and there will be a higher cost of being wrong. That means the number one adjustment that I want y'all to make is not trade more. It's actually trade smaller and be more selective. The number one adjustment that I want y'all to make is not trade more. It's actually trade smaller and be more selective. Do y'all hear me? If you don't hear me, then I hope it don't fuck you over this year because you didn't hear me, right? So I'm going to say it again. The number one adjustment I want all of y'all to make to y'all strategy going into 2026 on the simple fact that it's going to cost more, right? There is a higher cost of being wrong. I need you to make one adjustment, and that adjustment is to trade smaller and be more selective. It is not to trade more. Put a W in the chat if you you know what I'm saying? You get the gist, put a W in the chat. I need to make sure y'all engaged because I've been at 682 likes for 682 minutes. I'm trying to figure out what the fuck going on. I know what it is. A lot of y'all in bed sleeping shit. You know, that's the price I pay for going live at night. You know, the early bird gets the worm, but we rarely get sleep. Some of y'all you know, graveyard shift. Late, what they call it, graveyard shift. Some of y'all overnight, night shift workers. Night shift in the chat. Tap the screen if you in the night shift. They like, how, motherfucker? We at work. How we gonna tap the screen? Thank you. I appreciate that, OG. You kind, sir. Looking at. But look, so we know it's gonna be a lot of volatility in the market. I just told y'all what I need y'all to do. And it ain't what I need y'all to do. It's actually what you need to do. Volatility up means size down. Uncertainty up means patience up. Spreads wider means precision higher. Oh, that shit flew over y'all head, didn't it? They like, coach, what the fuck is you talking about? All right, I'm gonna slow that down for you. Let's unpack that a little bit. Coach, what the fuck is you talking about? All right, I'm gonna slow that down for you. Let's unpack that a little bit. Volatility up means size down. If the market is going crazy and it's moving doing $20 in a day, you can blow your fucking account that day. You can make a lot of money, but you can size down and still make a lot of money. Size down means don't put the fucking house on it. Okay? Size down and still make a lot of money. Size down means don't put the fucking house on it. Okay? Bet a little bit, not a lot. I'm using the word bet because you a fucking gambler. But no, I'm serious. The word is leverage. Leverage or risk. Okay? Position. Size down. Uncertainty up means patience up. When there's uncertainty, calm. And that's when you really need to be patient. And then when the spreads are wide, meaning you pay if they say they want $2.80 for the contract, we all know that that's $280 for that contract because one contract equals 100 shares. So if that contract has a fucking 50-cent spread, you really need to be more careful with where you get in at or where you get out at. Now, capitalize in a smart way means you don't trade every scary careful with where you get in at or where you get out at. Now, capitalize in a smart way means you don't trade every scary headline such as the one you're looking at. You do three things. You need to reduce how fragile you are, fragility. Tighten your personal finances so that you don't become a forced seller, so that you are not forced to sell. You need to make sure you got an emergency fund set up so that you ain't selling the shit when you really need to not be selling it. You need to have a plan to get the fuck out of debt. You need to have a stable budget. Inbox me now if you don't have an emergency fund, if you don't have a plan to get out of debt, and you don't have a stable budget. You need one. please inbox me. I'm somebody on TikTok that's looking to help you, and you need to make sure that you are servable. What is servable? That means you are able to be served. Please don't make it hard for me to serve you. That's crazy. Somebody trying to help you and you making it hard because you're still confused about money. You are the scam. You are still confused about money. So if you don't have a budget, you need one. Inbox me. I will help you build one. You need a plan to get the fuck out of debt. Inbox me. Inbox me. I will help you build one. You need a plan to get the fuck out of debt. Inbox me. And if you don't have an emergency fund, you definitely need to inbox me. You need to tighten your personal finances so that you don't become a forced seller. Understand rotations. All right. Risk rises and money rotates. Not everything drops. Everything don't drop. Some of the shit you can hedge. Some things benefit in the middle of headlines like this. Some things you literally can bid as protection. So I want you to manage volatility like a professional from now on. Volatility up, size down. Literally. No plan, no trade. If you don't have a plan, don't take the trade. You do not need to do impulsive entries in a high volatility environment and then act surprised when you get slapped the shit out of. Now, I've been yapping and yapping. I ain't really took no break. I'm going to practice this with y'all because listening isn't learning. You have to do something to learn. I'm going to give you a statement and you tell me what channel is that in. All right. So if you hear some shit and like, let's say energy channel is that in. All right. So if you hear some shit and like, let's say energy and volatility usually show up fast, shipping risk and climb, defense expectations, and like, let's say energy and volatility usually show up fast, shipping risk and climb, defense expectations can rise, currencies can react. If you see a news title and it say escalation rhetoric increases and conflict risk rises, what channel would that be? They like, I don't fucking know. Okay, diplomatic back and forth continues. What does that usually do? If you see a news line and it says news, what would that bring in the market? Is that gonna make the market go up or down or sideways? Can anybody tell me if you see a news headline and it says diplomatic back and forth continues, what will happen in the stock market when you hear that? I'm trying to teach y'all how this shit works. It is going to be a lot of volatility. It's usually going to chop and go sideways, whips off, because the market is repricing probabilities on a daily basis. Which leads me, look, Trump talking to Ukraine right the fuck now. Right now. So this is a headline right here. This is the type of shit I'm talking about right here. It leads perfectly into what I want. Russia and Ukraine peace plan. Headlines, phone calls, meetings, and why the market whip around whenever there's some shit like this go on. This is perfect. This is perfect. Peace news is not peace. Just because they talking about peace don't mean that this is peace. Don't mean this finna be good. A phone call is not a treaty, ladies and gentlemen. Just because they have a fucking meeting, that don't mean nothing. I don't care about the... Don't mean this finna be good. A phone call is not a treaty, ladies and gentlemen. Just because they have a fucking meeting, that don't mean nothing. I don't care about the negotiation headlines. It's not reality. So this is why you get pumps on optimism. You also get dumps on setbacks. And then the market gonna chop when nothing is confirmed. And you're going to get a lot of fake outs whenever headlines contradict each other. This shit literally moves the market. I've paid attention. And you're going to get a lot of fake outs whenever headlines contradict each other. This shit literally moves the market. I've paid attention enough this year to know, how to make money from this information. This is not financial advice. This is for educational purposes only. Welcome to the Ironworth Show, y'all. I appreciate y'all for stepping on in. Hit the follow button if you're new here so you don't miss another live. And thank everybody that's liking the screen. I'm thankful. Thank you. So If you keep getting chopped up because you reading these headlines wrong, it's not because you cursed. It's not because you got bad luck or some shit. It's literally because the news like it's a final result. I don't want y'all to pretend y'all understand and then get fucked over. Tell me if you don't understand. Like the screen if you overstand and you understand. They talking about a ceasefire. Okay? A ceasefire is a pause in fighting. It's not a resolution. Yeah, this can be real. It could be temporary. It could be a break. But a peace deal is an agreement with terms, political buy-in, whatever, right? But security will guarantee what happens if someone breaks the agreement with terms, political buy-in, whatever, right? But security will guarantee what happens if someone breaks the deal. This is the spine of the whole conversation, right? So there is referendum talk. The market here is referendum, and then we think long timeline. We think about political risk. Territory is one of the hardest variables because it is not just. Then we think long timeline. We think about political risk. Territory is one of the hardest variables because it is not just land. We dealing with global tensions. It's identity, it's resources and leverage. This is why negotiations can drag even when people claim that we dealing with progress. All right. So every peace story, they talk. They're going to have phone calls. You're going to see friendly and pragmatic language. I'm teaching you how to dissect the fucking news right now. Layer 2 is terms, borders, security, sanctions. Layer 3 is execution, funding, enforcement, right? Survival. This shit take time, but most people trade layer 1. All right. They trade layer 1 like it's layer 3. Then they get mad that when the market don't make sense. It do make sense. You just traded the trailer of the movie like it was the full fucking movie. When a piece headline hit, it is only going to change the risk premium. Risk premium flows through multiple channels though. European risk assets can whip because we perceive that region is going to have a problem. Energy and industrial commodities can react because supply expectations and sanction expectations moved around. So volatility itself moved around. So volatility itself is going to react first because the headline hit, right? But then the algorithm moves instantly and we chase that shit. But let me stop speaking French. People chase that shit. Because I don't chase it. Anything you chasing is running from you. Now, what you should expect when these negotiations and headlines keep happening is something called contradictory headlines. One side gonna say that this is progress. The other side is gonna say, no, the fuck it ain't. And this is gonna create bears and bulls in the market. This is gonna create buyers and sellers, right? So you can expect a weekend gap. Y'all can expect a fucking gap when we open up Monday. When we open up today. So whenever you got big diplomacy stuff, it's going to drop when the market is thin or is closed. Like right now, it's closed and it's been thin. We had like a 3-day trading week. Then Monday is going to open up fucking weird. We will see Monday open up weird. We had like a 3-day trading week. Then Monday is going to open up fucking weird. We will see Monday open up weird. There will be clusters of volatility today. I don't see it being a calm day. But if it is, there will be a calm day, then a violent day, then a calm day again, right? And you can expect them to have something called narrative wars, where they just using headlines to push this shit. People are going to try to frame the same event as victory or betrayal, depending on what side of the politics they on. I don't give a fuck about politics. The market don't give a fuck about what enforceable terms and probability. It's not about predictability. It's about probability. So you need to capitalize. Capitalize. It don't mean this. No, literally capitalize in this segment means you don't trade every headline like it's a guaranteed. Capitalize, it don't mean this. No, literally, capitalize in this segment means you don't trade every headline like it's a guaranteed outcome. You separate the rumor from substance. You want to build a scenario tree and you're going to match your lane. What is a scenario tree? Okay. If probability of agreement rises, all right, the risk premium compresses, some hedges gonna unwind and some of the cycles gonna breathe. Some of these, you might see the defense sector go up, some of them go down. It'll rotate. But if probably some of the cycles gonna breathe. Some of these, you might see the defense sector go up, some of them go down. It'll rotate. But if probability stays stuck, you're gonna get chopped. It's gonna go sideways, and it's gonna punish you if you overtrade it. You gonna get whipsawed. That means you gonna press buy and it's gonna go down. You're gonna press sell and it's gonna go up. That's I'm telling you what I know. Now that last one is the one that literally bankrupt people. Not the big crash, but the slow bleeding one that people, they keep taking low quality trades in situations like this, and that's what fuck them up. So protect you. If your plan depends on one headline, then you don't have a fucking plan. Remember that. Remember that. Remember that. You do not build your retirement plan every time a negotiation headline hit. You want to stick to your system. You need to have a contribution plan. Some people like, who does that? People do this shit. You need to diversify. So when the AI sector is down, your whole portfolio not down. Shit. You need to diversify. So when the AI sector is down, your whole portfolio not down. You should not just be investing in one thing. For all the crypto bros out there, you should not just be invested in crypto. That's crazy. That's why gold and silver and fucking platinum then rolls on your ass like that if you don't have none. For those that don't have none, we have been talking about it for a while here at Ironworth Trade, and my people know. They know I've been telling, we've been talking about silver and the importance of it for a minute. And now it's on its way to $100 a share. Talking about silver and the importance of it for a minute. And now it's on its way to $100 a share. Or an ounce. Sorry. Silver, the cheap shit. And what if I told you it could be $1,000 one day? You're going to be asking when instead of focusing on making sure that you get some. And guess what? You missed the opportunity to get it when it was 20, 30. You bullshitting. We ain't going to talk about that right now. I'm not going to go over that. Even Bitcoin, it being down right now and people ignoring it is crazy to me. This is opportunities we looking at. Yeah. Silver then took the fuck off. I'm talking about for real. Literally. It's up there. Y'all been seeing the headlines. You already know what's going on. Like, you know the fucking vibe. Silver been surging. Gold been surging. But this is not normal. Somebody asked me, why is gold going up? Or why is silver going? This is not normal. Silver pushing above 80 an ounce. This is not normal volatility. Like, this means somebody's stressed the fuck out. This is the market is stressed out volatility. Right? But I'm going to let y'all know something right now because it's going to make you smarter than 90% of motherfuckers yelling on TikTok. Silver is not just a precious metal. Me and my pops was just talking about this. He was telling me, silver is not just jewelry. I know that, right? But it's also not just a precious metal. Silver got 2 jobs. More than that, it got so many uses. But let me just put it this way. It got 2 personalities. And that's why it can move the way that it's moving. Silver is a money metal and an industrial metal, right? So gold is mostly a money metal. We know that. People buy gold. Also, they buy it as a hedge. They buy it as jewelry, right? They put it up in the safe. They get gold coins, gold bullions, etc. They use it as a store of value, right? So if you got money, you can put this money up in gold because you don't believe in the dollar or whatever, right? Cool. But And I want y'all to go study House Joint Resolution 192. That is y'all homework. Go study House Joint Resolution 192. HJR 192. That's your homework. That's all you got to do is go look that shit up. If you didn't know about it, they didn't teach you about it in school, it's okay. I ain't going to talk about it right now because I don't want to nerd out that much, right? But anyways, people buy gold and they put it up and they treat it like this is how I'm going to store my value. Now, silver do some of that. So silver do that too. People do that with silver as well. But silver also gets consumed by the real economy in a way that gold doesn't. Silver is used in an industrial application. They using it in fucking in big factories. I put it that way. Data centers, electronics, technology, electric vehicles, wind turbines, cell phones, computers, AI. Did I say AI already? Literally, this makes silver important. Silver can rise because people are scared and they want to hedge, but it also can rise because the industry literally needs it. So when both of those, let's say demand engines, because it's demanding, when both of those demands hit at the same time, that's what you're looking at. That's why we got such a violent move on silver. So if you ever wondering why silver tends to be more chaotic than gold, that's why. And it got more room to grow too than gold does. Tap the screen if you hear me. Let me know y'all hear me. Tap the screen if you hear me. So I'm gonna talk about this price that everybody obsessed with, silver going over 80. Okay. Wait a minute. Ain't nobody with me? Oh, I was finna say, damn, ain't nobody like the screen. That mean that nobody hear me. That's crazy, man. We hear a big number like gold. I mean, silver going over 80 or gold going to 5,000 an ounce. But we hear these big numbers and we think the number itself is the reason, right? Like $80 mean that it's expensive. This is not how the market works. Price is not just a number, though. I want y'all to remember that. The price is a signal. So when price breaks a major psychological level, it changes behavior. It's going to force different groups of traders and institutions to react. Literally, when the price breaks a certain level, people start reacting differently. So as soon as it get to one part, it'll take the fuck off on you just because it got to that psychological level. So you got two groups of people, right? I'm going to break this shit down to what happens when something like silver get pushed into this level that I'm telling y'all about. This psychological level that shock people. Group one, you got people that short. They short the shit out of everything. What do I mean by short? They think everything going down. When you think something is going down in price, you short it. If you think the price of silver is going down, you short silver, right? So now you know what short means. Hear me out. You got a group of people that are betting against it. When the price rise too fast like it just did, shorts feel pain. Okay? The people that let's call them shorts. The people that want this shit to come down, they are in pain when this shit is going up. That's with anything, especially when you bought a put on something and it's going up. How many of y'all ever bought a put and the price went up? How many of y'all ever press sell on futures and the price goes up? So you know that feeling, right? That's the feeling I'm speaking on. That pain, that feeling that you get is going to force you to make a decision, right? And the decisions force buying to cover. Buying to cover adds fuel. Some people buy to cover their ass. And when you buy to cover your ass, it adds fuel. The second group is hedgers, right? Producers and consumers who use futures markets to hedge price risk. They models update when volatility spikes. So they change their shit up whenever the volatility spike. They margin requirements can change. They risk managers get involved. So they can force position changes that have absolutely nothing to do with what they believe about silver. It is just mechanical. Then you got the third group of people. That's a lot of y'all fit in this category. You follow trends. People who chase momentum, they say this is a strong trend, and then they get in. And that creates more demand. That make it go up even more. that can also create more trend that can make it go up even more. That's going to bring in more people. It's a feedback loop. So $80 on silver is not a magical number. It is a psychological number, and it is a mechanical trigger point that is going to change positions. We're going to see, we can see $100 on silver. Yeah, change positions. We're going to see, we can see $100 on silver. Yeah, we can see $100 on silver. So, the futures market, y'all know about the futures? Actual physical markets. Like you can trade crypto futures, you can trade corn futures, you can trade the some stock market, some ETF futures. Actual physical markets. Like you can trade crypto futures, you can trade corn futures, you can trade the some stock market, some ETF futures, right? So they exist because the real economy needs them. A manufacturer doesn't want to gamble on the price of silver changing while they are stock market, some ETF futures, right? So they exist because the real economy needs them. A manufacturer doesn't want to gamble on the price of silver changing while they are trying to run a business. A miner doesn't want to gamble on fucking price dropping while they are. It's risk management. That's what people use. It's risk management. That's what people use futures for. So when the financial layer gets very large relative to physical availability, leverage can distort the way people behave. It can create squeezes. Squeezes is when this shit is just going to go up like silver is. Leverage can distort the way people behave. It can create squeezes. Squeezes is when this shit is just going to go up like silver is doing. And then flushes, which is when the shit go down after people start taking profit. This can feel disconnected from what's going on in real life in the short term. Like, why is silver doing this? That's why people keep asking that. They do leverage? They do leverage shit. So if you want the simplest explanation, somebody asking to join, no sirree, Bob. People, the last person I let join, I don't know what the hell they was on, but yeah, no, they was not on top. They wasn't talking about what I was talking about. No. Person I let join, I don't know what the hell they was on, but yeah, no, they was not on top. They wasn't talking about what I was talking about. No. Stop asking. All right. So we talked on it from a industrial demand because I told y'all about electric vehicles or whatnot, right? On it from a industrial demand because I told y'all about electric vehicles or whatnot, right? This is an important piece of the silver story too. So silver is a highly conductive metal. Do y'all know what conductive mean? Conductive matters. Do y'all know why silver being conductive matters? Because modern industry runs. Conductive matters. Do y'all know why silver being conductive matters? Because modern industry runs on electricity. It runs on data. We got data centers and shit. We got sensors, energy conversion. When industries like solar, whenever they scale, silver matter. When electric vehicles and electronics demand scale up. Whenever everybody want more electronics and everybody want more electric vehicles, silver demand matters. Yes, I do, JoJo. I'm gonna be fucking loaded. I'm loaded. Don't get me started, cause I'm already in a put position. JoJo, I'm already in a put. Wonderful day. We already had the market going down, but guess what else, JoJo? Wonderful day. We already had the market going down, but guess what else, JoJo? I love it when it go down, cause it's time to treat this shit like it's goodwill. Cause it's time to treat this shit like it's goodwill. It's time to treat this shit like it's Goodwill. We didn't do it in April. Oh, let me stop yelling. Hold on. All right, let me stop yelling. I said, you know what? It don't matter. I'm just letting people know why silver is going up the way it is. So silver is not just a pretty shiny metal, ladies and gentlemen, right? This is a working ingredient in modern industrial change. So when people say supply bottlenecks pose a serious challenge, it really does. They are pointing to a real concept. If a material is hard to substitute and demand, right, well, then the demand gonna grow faster than the supply. When the demand grows faster than supply, the bottleneck can put pressure on production cost and timeline. So now, I told y'all about how Musk said that this is not good for the industrial development. He didn't like the fact that silver was going up. Oh, Elon. Elon did not like the fact that silver is going up. So we got a lot of viral clips that Elon has commented and said that very high silver prices are not good for industrial development. Now, whether or not you give a fuck about this information or care about what he think, the point is that when silver prices spike like they just did, industries that rely on it can see cost pressure. A billionaire's comment is not a trading plan. It is just a narrative signal. Narratives can attract capital. Capital moves the price, but you do not worship what they say. We don't give a fuck what they say. We just care about the fact that it's going to move the market. So we watch structure, we watch flows, and we pay attention to our risk, right? A lot of people hear silver is going crazy and they immediately jumped into some type of silver leveraged product, right? Because they want to feel like they part of history. Why? Hey, does anybody know why TikTok keep telling me that somebody's interested in contacting me? Because I'll be wondering why that just pops up on the screen. And then when I end the live, nobody contacted me. So, you know, if you're interested, just DM me. I think there's something that's popping up on the screen and y'all interacting with it. Maybe, I don't know, but y'all inbox me. You might have to actually inbox me or DM me. So anyways, so when people get in because they hear silver went up, they want to feel like they part of history, right? But that's how you gonna kill your account. Yeah, TikTok is effing around today. Oh yeah, they on 10. So silver is not a gentle asset, ladies and gentlemen. When it's in one of those regimes, it can run and it can rip your face off in a pullback. When volatility rises, your position size must shrink. I told you that. When volatility rises, shrink your position size. Did you hear me? I hope you heard me. I hope it go through your head and you actually get what I'm telling you. That means whenever you see the market doing what it's doing, you shouldn't be trying to put in so much. Volatility up, size down. Now, how do we capitalize in a way that don't turn into gambling? I'm not joking. I'm so tired of the gamblers. How do we capitalize without this turning into gambling? Yep. We're going to capitalize by understanding the difference between the story and the structure. The story is silver is scarce. Demand is rising. The prices of it is going up. The structure is volatility is up. Liquidity can be thin right about now. The margin can change and positioning can force moves. What do I mean by liquidity can thin? What is liquidity? So let's pretend you got a garage sale, right? And at this garage sale, you are in a area where there isn't a lot of traffic. And because there's not a lot of traffic, it could take a while for you to sell. It could take a while before you can actually sell because there's low liquidity. But when there's a lot of people on that street driving by, there's high liquidity and there's a lot of buying going on fast. There's people you can sell fast, right? That's liquidity in a nutshell. So when you're dealing with not that many people, you should be very careful when there's low liquidity, when it's thin. But capitalizing means that you do not chase. You do not chase. You do not buy because you're excited. You don't short some shit because you offended. You build rules. Your rules should look something like this. You can't explain why price moved in terms of either supply or demand, right? Policy or positioning. Then you don't have a thesis. You just got a feeling. When we dealing with violent commodities like gold, let's use that for an example. Your timing matters as much as your direction because you can be right on the trend and still blow up from where you got in at and how much you leverage. So don't trade volatility with your rent money or your mortgage money or your car note money or your phone bill money. No. You trade volatility with risk controlled sizing. If you don't got that, then you're not in the right arena. I need you to get the fuck out of my life. You shouldn't even be trading. And I'm sorry ain't nobody ever told you that. You around too many yes men or yes people. They ain't telling you the truth. They're not letting you know the truth. They not telling you that you in the donation line. Coach Price here to let you know you're in the line to donate your money at that point. I'm going to say it again. You do not trade this type of shit with your rent money, with your mortgage money, with any money that you need. So I'm going to address something that I want y'all to pay attention to because China, you know, they got some export restrictions beginning in the next couple of days where motherfuckers going to need a license. There's some reports circulating about the possible exporting that we're dealing with on China. And if this becomes confirmed, right, with any type of primary source, this will be a supply side policy factor that could intensify the volatility on silver. But we don't trade rumors as facts. We got to wait for the verification. You know what I'm saying? We got to wait for the verification. Supply and demand is an obvious one, but policy is a sneaky one. Positioning is one that explain why the move get violent so fast. But I'm gonna give you an example real quick. Silver, I told y'all that this is a stress test. So when it moves like this, it's telling you something about supply and demand and leverage in the system. Speaking of leverage, when we move, we're gonna move to the part that people ignore too and then smack the shit out of them. The exchange itself. Y'all know that, you know, for those that trade futures, y'all know what they doing y'all heard about what CME Group doing? Y'all ain't hear about what they doing? The CME raising margin requirements across metal contracts. This is the kind of shit that brings boring to y'all. I get it, but it matters. It matters more than half of the shit that y'all hear people talking about. When they change the margin on futures, this can force behavior. This is not a rumor. This is real news. The CME posted a notice that they are raising performance bond requirements across all the metals effective after the close of December 29th, 2025. So after today. Margin is not a fee. I'm gonna explain what this means. You know, when you trade in futures, you got to deal with something called margin. There's a margin requirement. Okay. It's not a fee. It is not a commission. It is the deposit. When you trade in futures, you got to have a certain amount that you deposit in order for you to hold a position when you trade in futures. So it's basically them saying that if the market move against you, we need that money, bruh. Like, we need to know that you can pay. All right. So when volatility is the way that it is right now, abnormal, the exchanges raises the margin to protect the whole system. They're not doing it to be mean. They doing it so that one wave of volatility don't blow up the whole fucking market. Now, this is the part that makes this a market moving event. When the margins go up in futures, right? Whenever the margins go up, the leverage goes down. Not because people suddenly becomes disciplined all of a sudden. It's because they don't have a choice. So you was holding a position that required, let's say, let's say it required you to have $1,000 of margin. And now it requires you to have $3,000 of margin. So now you got two options. You can add more money or you can reduce your position size. That's it. It's forcing you. And a lot of people cannot or will not add collateral, so they just reduce. When they reduce positions, that can create people forced to sell, forced to deleverage. That type of deleveraging can cause a sharp ass pullback even whenever there's a large uptrend. This is why people get confused and they say, but silver is bullish. Why did it dump today? Because, nigga, it dumped because the market is literally reducing leverage, not because the story changed. That don't mean you shouldn't be buying silver. This is the part that separate people who know headlines from people who understand market structure. So when I tell y'all that they raising margin requirements, it don't tell you a direction. It just tell you that there's some stress. There's some shit going on right now. It's stress. But why do I care? If you're not trading futures, you might be thinking, why do I give a fuck about this? You care because the futures markets are a major part of price discovery. The futures flow, the way they flow, it affects the way we think about what's going on. So the people who are hedging, right? The futures positioning, it affects that. It affects their hedge. Whenever you got people that's in the market that's like whales, big participants, whenever they forced to reduce, that shit can spill into other markets like ETFs, right? SPY, miners, even broader risk sentiment. So if you never touched a futures contract in your life, the futures market can still touch you. So the correct thing to do is not buy or sell because the margin changed. The correct thing is understand that margin can create violent moves that are not purely based on fundamentals. Sometimes the dip is not the end of the story, ladies and gentlemen. Sometimes that dip is leverage. It's being wrung the fuck out though. So the dip is not pure demand and the rip is not, the rip is shorts being squeezed and people are chasing collateral. So you make money by not guessing the direction. You got to build some rules that's going to keep you alive in this high volatility space that we in right now. What did I tell you? Rule number one, in a high volatility space, your job is not heroism, right? You need to survive. So size the fuck down. Don't put all your money in there on days like that. Rule number two, if you can't explain your exit before you get in, then you don't get in. Rule number three, if a move is being driven by margin, liquidity, and positioning, I expect a sharp reversal and I trade accordingly. I'm going to make my size small and I'm going to be even more patient. And if my plan rely on the market being calm, I don't need to be trading when the market is screaming. If my plan relies on the market being calm, I don't need to be in there when it's like that. Have you ever gone into private equity? Yes, Oat. Yes, I have. Good question. But plan first. So silver is surging. We went over silver a lot, you know what I mean? But I did it for a reason. We got a lot of shit going on. So silver is surging. We talked about the supply and demand, position and stress, right? So this instrument could be futures, it could be ETFs, whatever. But either way it go, you want to make sure that the risk plan is sized down, volatility respect, and you need to not be chasing nothing. All right. Basically, don't chase shit. You need to don't put so much into it. It's as simple. What y'all trading today? Because now Bitcoin, let me see where Bitcoin at. Hold on. 89. It says it's around 89,000. So people ignore Bitcoin where it's at right now just to buy the shit when it's at a higher price. Why do we do shit like that? You can get fractional shares. I don't even know if Bitcoin will continue to go down to 70,000 like I was predicting right now. That might happen further down the line. You know, but don't miss the opportunity to get it where it's at now, and then when it shoot back up, that's when you want to get in. That don't make no fucking sense. What is the psychological reason behind people buying high and then selling low? Then when it dip, when it fall back down, you ready to sell. I don't know. I don't want to just talk about one single thing, right? When you zoom out, if you only trade single headlines, you're going to always feel late. You got to have a big picture. You need to have a whole picture. And the big picture is the business landscape and the capital cycle that's driving everything. You got to always pay attention to that. Right now, the dominant capital cycle is AI. Yeah, AI is the dominant capital cycle. Y'all wearing AI the fuck out. Not because AI is cool, but because it has changed productivity. Productivity has changed how much money motherfuckers is making. And profit, right? How much money we making, that changes the stock prices. Every single era, they didn't had a miracle material. Every era got what is it? A miracle. What do I mean by a miracle material? Steel changed the industrial age. Semiconductors changed the digital age. AI is being treated like the next miracle material because it can turn labor into software. And then, we know software can grow. But when the world believes something can grow, capital gonna come the fuck in. Money gonna flood whatever the fuck we think can grow. If we think that this can grow, money is going to flood it. That's what we done seen this year, and it's not done. It's just getting started. So y'all done seen how extreme this shit got. NVIDIA became the first company to hit $5 trillion market cap this year. That's big. We witnessed history this year. That's not normal. That's the market letting you know, look, this is the center of the machine right now. A big ass AI boom does not mean every single AI related thing is a guaranteed winner though. Right? We learned our lesson with Big Bear AI. But I'm not done buying BB AI. I tell people buying this company, buying BB AI is like buying Palantir when it was $5. I said it. Yeah, I said it. I'm standing on that. Just look at what they do. But either way it go, right? Either way it go, the spending is real that we dealing with AI, but the fear of being left behind is also real. So, yeah. This is why you're getting a lot of people thinking that AI is about to go to higher prices and they hyping it the fuck up, but people also losing a lot of money too. So in every single boom that there has ever been, remember I told y'all about the miracle materials. Every boom, the first phase is simple. People buy the shit that is the obvious leaders. Whenever the cars first came out, I'm pretty sure that Chevy had investors, Ford had investors, whatever, right? The first wave, people always invest. The second wave is where real money come in, or where the money move. This is where the users come in at, and the infrastructure. So I want you to hold this in your head. Phase 1 in the gold rush was the shovel sellers. For us, that's the chips, the cloud, the data center, the hardware. Phase 2 was the people that was actually digging for the gold. That's the users. In this case, that's the companies that use AI to cut costs, reduce errors, and to grow revenue without fucking scaling their payroll. And then you got the third wave, which is the survivors. These are the people who can actually turn this into money. And usually beginners only see phase one. They think AI equals NVIDIA, and that's it. That's the end of their thinking. That's as far as they can go. That's not analysis. That's you just, recognizing the name. That's it. Make sure I try to save y'all money. That's what I'm here to do. Make sure you some money. Ain't nobody saved me. That's why. It's like, why you doing it though? Because I wish somebody had been on here talking like this when I first got in. I'm going to tell you something. Every boom, the crowd overpay for the obvious shit and they ignore the boring shit. And then later on, the boring shit becomes the bottlenecks. The bottlenecks can create the next wave of winners. I'm telling you. You shouldn't be talking about how big AI is big. Yeah, no, that's not the question. The question is, what is the bottleneck? And right now, one of the biggest bottlenecks is not the software, it's electricity. It's electricity. So a boom can be rational and still be dangerous, but even serious outlets have framed this AI wave as a boom driven by strategic fear from major technology firms and not just us on some random shit. Now, this means that the spending can be real, but your timing can still be wrong. You can invest a lot of money into AI. People are investing a lot of money into AI, but there may be a while before you see a return on investment. Stop thinking you finna get rich tomorrow from this shit. You need to be prepared to hold this for the next 5, 10, 15 years. I'm serious. You got to know where you got to know, and you got to be buying the whole way for you to actually, what's the word I want to use? For you to get the gratification from it, right? For you to see your efforts compounded. You got to be willing to hold this shit for a while. And you need to be buying that whole while. You should be buying and taking advantage that the price ain't shot up on your ass right away. Otherwise, you ain't getting rich from it. But while it's at the same price that it's at, you should be taking advantage of that and investing. The way this works is every week you get paid, some of your money should go into an investment bucket or an investment account to where that money is going into the market because the market going to give you a bigger fucking return than a bank account. The bank account ain't going, your savings account is not giving you interest. You're not growing. Your money is not growing interest in a savings account. It is actually fucking losing value. It's being ate away by inflation. So you need to be investing. I can't tell you what the fuck to do. I'm telling you what people do once they know financial literacy. Once they got this, once they become financially literate, then they know some of their money need to be put into an investment account. They have to invest. Not one time and think you're done. Oh yeah, I got some. I got 10 shares of this and I got 8 shares of that. And you ain't done. Oh, but I got 100 shares of this. You're not done. You're not done. But me, I got rules. I got plenty of rules. I don't chase parabolic moves with oversized positions. I separate long-term shit from short-term volatility, and I don't confuse a headline with the trend. I don't. But as far as AI, this AI revolution that ain't nobody talking about because it's not really sexy, the power, electricity, the infrastructure, the amount of cooling that it takes for AI. The amount of cooling that it takes for AI. It does not run on fucking prompts. It runs on electrons. Y'all got data centers in your backyard. These motherfuckers popping up all across the nation. They are exploding in power demand right now. And when the power demand explodes faster than the grid can connect, you get a real world constraint. A real world constraint can create power, pricing power for the people who solve them. So let's make it simple. If the grid is slow, companies got 3 options. They can either wait or they can pay more to get connected faster if they can. Thank you for liking the screen. I appreciate you so much for tapping the screen. I could use the help. They be acting like they can't tap the screen, Miss Matthews. And some of them sat in here and got some good information, you know. But they be acting like they can't help me out with that. You know, it's all good. This type of shit that my dad be like. He said he came in my live and heard me expecting people to tap the screen. I don't expect people to tap the screen. You feel me? I just expect them to show support. That's all. Thank you. I appreciate you. Hit the follow button if you're new here. I talk shit. That's right. We're not Burger King. This ain't have it your way. This is not have it your way over here. You might get cussed off. Hold on real quick. Let me look up the gold futures and see where they at. JoJo said the whole market crashing right now. Oh, you here to hear me cuss somebody out? I ain't cuss nobody out in a minute. I think that's why don't nobody fuck with me. You remember I used to have 300-400 people inside the live at one time. I done cussed everybody clean the fuck out. Now only the strong survive at Ironworth Trading. You know? I'm sorry, y'all. Sorry, not sorry. Gotta have tough skin. But look, now I told you the companies can either do one or three things. They gotta either wait, or they gotta pay more, or they gotta see if they can generate power on site to avoid waiting. So the reason why this matters is because the grid is not a light switch. They don't just got a switch they can turn on. This shit takes years for them to upgrade the grid. Getting the permission, the permits, that takes time. The transmission takes time, right? The equipment that they need to do it, that shit takes time. The skilled labor that it takes to get the shit done at these data centers. I know, I work with the union. Okay. We've done jobs at these sites that they are building out here in the middle of Indiana, right? This shit take time. They not running and they're not even up and running yet. But that's why interconnection queues get long. That's why the AI boom becomes a power boom. Listen, y'all got to see what the fuck finna happen. You can look at AI all you want, but you might want to pay attention to shit like the energy sector and quantum computing. I'm telling you, this is not just a business story. This shit then became political too. They talking about Trump administration. He wants to increase federal control over aspects of how data centers connect to the grid. And they see this as him trying to, grab power. I'm not here to argue politics. I'm just letting y'all know how does this translate into the market. When a government policy start touching the grid, right? When government start fucking with the grid, you looking at a potential acceleration or the bottleneck that I was just telling y'all about as far as infrastructure spending. So either way, the money is going to follow the constraint. So the grid interconnection. This is the process of physically and legally connecting a big electricity user, or generator to the grid. They need permission for that shit. It takes time for the transmission of these data centers. That's the long distance highways of electricity. Seeing is like, okay, bro, so what stocks? You need to be asking what sector. That's how big this is. You got to think about the local streets that deliver it. Think about how the data centers they got a big load. And then I told you about cooling, removing the heat from the data centers. Because it ain't about ETF saying I said sector. Because heat is wasted energy, and wasted energy costs money. So if you understand those terms, then you can follow the real story behind AI. In every boom, you have to find what can't scale fast enough. That thing becomes the bottleneck. That bottleneck becomes the investment opportunity. So in AI, we're dealing with power, cooling, and physical build out. Like literally the whole factory, the whole data center. You know how much fucking copper and silver that it takes for them to have them data centers? So that means that the AI trade isn't just NVIDIA. It's not just only chips. It's not just one single stock. Utilities and grid equipment, going to make money. Power generation and backup systems, cooling technology, construction and data center build outs, copper, silver, and industrial inputs. Anything involved in connecting and maintaining the infrastructure of AI is going to make money on. Put a W if you get what I'm saying. I know I used a lot of big words, but I know y'all not stupid. I'm done talking to people like they kids. I'm going to connect this shit to you to something else important. This shit can reverse fast. That's why I don't marry a narrative. I track the constraints and the incentives. I want to pay attention. I want to understand that if AI spending is real, infrastructure spending gonna follow. So if the infrastructure spending gonna follow, the winners are usually the companies that solve the problems. And the problems, is electricity right now. And silver is a problem too, because we're dealing with what we're dealing with China. Any questions? Then they saying that we're gonna be able to take the money that we lost with crypto and write that shit off this year. That's amazing. So if you lost money with the crypto, you can write it off this year. How many of y'all don't understand capital gains? You make money in the stock market or you make money in the crypto world or the futures world, but do you know how to get some of this fucking money back during tax time? Do you know how to write this money? There's ways and things that you can do. I really think you guys need to inbox me as soon as possible if you don't have a tax advisor to help you out. Especially all you people that want to know how you can write off the losses that you made or that you had this year in the stock market or for crypto. See, I'm explaining the crypto loss, right? And it's how you can write this off. But I really want you to know that if you don't have a tax advisor, inbox me now, your name and your number. Okay? Inbox me your name and your number. So when you sell crypto for less than what you paid, that's a capital loss. Same thing for stocks as well. So when you sell something for less than what you paid for it, that is a capital loss. It is not a sad story. I know it hurt your feelings, but this is a number on paper that can reduce your taxes if you do it correctly. Okay? Now, capital losses can offset capital gains. If you made money in the stocks this year, but you down on some crypto, realizing that crypto loss can reduce the taxes that you owe on those gains. Y'all better pay attention. If you made money this year, they're going to tax your ass, but you can offset that with anything that you lost. But it's deeper than me just telling it to you. You need to inbox me so you can get hooked up with a professional. I got somebody on my team that's going to reach out to you. You just tell me the best time to call you. So leave me your name and your phone number and the best time to call if you need help with your taxes. It's tax time coming up. It's right here. But you in the stock market, you making money and you don't understand capital gains tax. You need a tax advisor that can understand you for the stock market and for crypto. Inbox me your name and your number and the best time to call you right before tax time. Now, I done said it enough. I have to say it again so everybody on the outside can hear it too. If your capital losses are bigger than your capital gains, the IRS generally lets you use up to $3,000 of net capital losses every year, right, to reduce your ordinary income. So if you married, filing separately is $1,500. So anything above that typically carries forward to future years until you use it up. So the write-off that people are talking about is not magic. This is just how capital gains and losses are netted. So I'm gonna give you an example. If you made $10,000 in stock gains this year and you got $10,000 in crypto losses that you actually realized by selling. So now these are really realized, right? You got unrealized gains and you got realized gains. You got unrealized losses and then you got realized losses. What's the difference? That means you really lost this shit. You press sell. If you didn't press sell, you didn't really lose it because the price can go in the other direction and you press sell and you made money. So if you sell it, then it's realized. If you don't, it's unrealized. It's quite simple. You made 10,000 in stock gains. You lost 10,000 in crypto. Those can cancel each other out on the tax side, ladies and gentlemen. That don't mean you made money. It just means that the tax bill on the gain can be reduced because you also lost money. So if you had $20,000 in losses and only $5,000 in gains, then you get to net to a 15,000 capital loss. So you generally use up to $3,000 this year against ordinary income, and then the remaining 12,000 goes forward, right? Now, everybody asking, how can I sell the crypto for a loss and buy it right back? That's when you're dealing with something called the wash sale rule. That applies to stocks and securities. When you sell, right? If you sell at a loss and buy the same or a substantially identical security too soon, then it's disallowed. They won't allow it as a loss. And crypto literally has been treated as property for federal tax purposes on a historical level. And because of that, a lot of tax professionals point out that the wash sale generally ain't applied the same way to spot crypto the way that it apply to stocks. That don't mean you get to be sloppy though. It just means you need to speak with someone that understands that this tax time, this tax season, because you own crypto, you shouldn't be speaking to someone who doesn't. Inbox me now, right? You would think that your tax advisor know about crypto and know about the stock market, but no, you'd be amazed. They cannot help you as much as you should be helped if you are not, you're not allowing them to. You might can ask them after tonight. You don't have to inbox me. You can ask them, but for those that's interested, I got a professional for you. Her name is Ashley Kent. She is amazing, phenomenal. Just get on the phone with her. Now, I want you guys to know that because the wash sale issues can come into the picture, this is exactly why you want to speak to a tax professional if you're doing anything besides just basic selling, okay? So if you want a loss to count, you generally need a real sale that realizes the loss. Not a I'm down, but I refuse to sell this so it doesn't count situation. Unrealized losses don't offset shit. Only realized losses matter. So people like to sell shit towards the end of the year for tax time so that they can offset the losses and not have to pay so much on taxes. They taxing what you do in the stock market, ladies and gentlemen, and crypto too now. So I'm letting you know this because a lot of people fuck up right here. This is where the IRS don't give a fuck about you not knowing, right? People don't know they cost basis. This is the number one mistake. Your cost basis is basically what you paid, including the fees. If you don't know your basis, then you don't know your gain or your loss. And if you don't know your gain or your loss, you are guessing when it comes to tax time. Another thing people fuck up at during tax time, they forget every time they sold or swapped, anytime you did a conversion on the crypto side, this shit is taxable. Everything you do is taxable. Selling crypto for money is a taxable event. Swapping one crypto for another one can be a taxable event. Using crypto to buy something is a taxable event. You have to track this shit. Another mistake rookies make. They think a tax loss, right? People think tax loss harvesting means that they won. Somebody says Bitcoin is going to take a big dig. That's for sure next year. History repeats itself. This is facts, not opinion. That is definitely an opinion headline. You know, we got to see some type of confirmation, Mr. Big Hoosier. I don't know what the fuck your name say, but you get my gist. But I'm telling people that they got to keep records of what they bought, when you bought it, what you paid, and what you sold it for. You need to calculate the gain or the loss on each sale that you take. And you're going to report those sales on the right tax forms this year because you're going to inbox me. We're going to get you a form 8949 from your brokerage, feeding into the Schedule D on your return, and then you're going to let the math net your gains and losses properly. One more thing. This strategy is for taxable accounts. Your retirement accounts don't work the same way. So people mix this shit up and wonder why don't nothing line up. And if you don't have a retirement account, inbox me. You should. You should. You should be focused and worried about retirement and not worried about it, working towards it. We don't worry about it. Worrying is like sitting in a rocking chair all day. It's something to do that'll get you nowhere. So we got late December. People sell losers to realize losses, right? That can push prices down. That's why we dealing with that this year towards the end of December, because it's tax time. So when you see the market doing what it's doing, know what's going on. Just know what's happening before, because right when the tax time, right when that shit over with, you're going to see a boom. Charisma, Grand Rising. So this is not new. Now the calendar is gonna flip. That same selling that we looking at this gonna fade away, and then the price action that's gonna change. When you see crypto dipping like it's doing right now towards the end of the year, you do not automatically panic and say it's dead. Crypto is dying. Right? Sometimes it's tax time. It's dealing with taxes. Sometimes it's leverage. Sometimes it's all three. This is why you need the framework that I was telling y'all about. Mr. Big said, I got Zcash at $38. We win and don't sleep on it. Now, this ain't the live stream to do that in, buddy. You can calm down with the all capitals. You know what I'm saying? I'm going to need you to turn it down a little bit. Next thing you say need to be in lowercase letters, pal. Next thing you fucking say need to be in lowercase letters. Nobody move, nobody get hurt. All right. I think y'all get the gist of the tax shit. I think y'all get the gist. Y'all get the gist. We're going to go over, matter of fact, so I want to speak to a few people, man. Let's talk to a few people real quick. I'm going to go back over this situation that I keep coming at. I had a client, and I'm putting them on blast. You might be in the comment section right now, but it is what it is. I won't say no names or genders. I had a client, and this client is like, hey, can my family member come inside the session, right? In our 1v1. Sure. Bring them on in. Cool. They come in the session. They learn. Next session, they'll be there. Cool. Next session, they get on the phone and they say, oh, y'all got to call me back. I'm watching the game right now. I got some money on this bet. This same person don't got a retirement account. This same person don't got life insurance. I ain't trying to put their business on blast. But this is bullshit. You don't have a solid financial foundation and you're gambling. That's crazy work. And you'll probably bring that gambling energy to the, you'll bring that gambling energy to the stock market. Mr. Nice Guy, you know I do. Hit the follow button. I don't know if you already following me or not. I need to see it say it, though. Hit the follow button. Yeah, Miguel, I hear you. It sound good. That sounds good, Miguel. It's not a sore losing situation. It's about being smart, right? So you can say you make money and you don't make you're a liar. You lying. Matter of fact, stop lying. I don't like liars. Let me put this shit together. You lying. And you don't make money consistently. And you can't tell me you do. But that ain't the point. The point is, I'm finna make the point. Hold on. Let me show you something. Stay with me. If you got a long enough attention span. This company right here is called Flutter Entertainment. Flutter Entertainment. Flutter. F-L-U-T. This company owns FanDuel, ladies and gentlemen. So I'm gonna tell y'all something so that you can learn. And I muted you for a reason. I ain't gonna kick you out the live because I want you to learn. I just had to shut you up real quick because you in here talking about don't be a sore loser. I am a happy winner, buddy. I'm not even a sore loser when I lose money in the stock market. You don't even know who the fuck you talking to. I'm the master of taking losses. I know how to take a loss. I can show you how to take a loss. Now, Seriously though, I'm super serious. You don't know. People take losses and they don't know how to lose, and that's why they get the results that they get. And I promise you, I will outtrade you when it comes to you gambling. You can't gamble better than I can trade. Now, this company is called Flutter Entertainment. Now, all you ladies out there, if you know your cousins and your brothers, or maybe even you, maybe your dad or your uncle, you know somebody who sports betting got them in a chokehold. Invest in Flutter Entertainment. Get them to invest in this company. This is not financial advice. DraftKings is also a company that they can invest in that's under $60 a share. So while they losing $60, they could have bought a whole piece of the company and benefited from people who are gamblers. So while y'all gambling, where I make money whether you win or lose, I will benefit from you gambling. It doesn't matter. As long as you gambling, this company gonna be good. And right now, I can get Flutter Entertainment for $220 a share after it then already rebounded off 189, and it looked like it's on its way back up to 313, like the last time it was at this level, and it shot up to 313 from 220. Put a W in the chat if you understand that it's better to buy the company that they are gambling on than it is to gamble. Do you agree? Put a W in the chat if you understand what I'm telling you. Don't be a gambler. Don't invest in fucking absolutely nothing in a dream or hope. You don't know what them players gonna do. That shit is more rigged. They like, oh, the stock market rigged. Okay, let me let you know something. Me investing in Walmart is not rigged. Me investing in Coca-Cola is not rigged. It's at $220 a share right now. And this company owns FanDuel. DraftKings is another company. Let me show you how much DraftKings costs. While I'm going to get DraftKings, y'all hit the follow button. Owns FanDuel. DraftKings is another company. Let me show you how much DraftKings costs. While I'm going to get DraftKings, y'all hit the follow button. Follow button. All right, so DraftKings is another one of them things right here, right? Look, check out DraftKings. For the people that gamble and y'all can't stop fucking gambling, this is why I want you to pay attention right here. This company, $34 a share. This company, $34 a share. Grady, it cut out because I left to go get this image. Can you hear me now, Grady? And you know what? It do suck. It always sucks. And I'm not blaming that. I kind of want to blame TikTok. Somebody says got all those shoes in the closet and didn't invest in the brand. Exactly. You drive the car and you didn't invest in the brand. Nonetheless, why would you want to? It's cool. I'm not telling you that you can't gamble, right? I don't tell you what the fuck to do, right? If I could tell you what to do, I would tell you to call the gambling hotline that they give you. I would tell you that you need to call that number, that 1-800 number that they give you for you being a gambler. Since I can't tell you what to do, what I'm suggesting that it would be smart to pay attention to the entire company instead of gambling your money on the company or in the company, right? So you getting on FanDuel, you getting on DraftKings. Let's say you make a lot of fucking money. It would be smart for you to take the returns and invest it in the company and actually own it. Because guess what? Your son, your grandson might end up still on this shit in the future. We don't know. See, the future of sports betting is actually kind of bright. This shit is still new. The fact that they letting us gamble on our cell phones from the comfort of our home is still a new concept. Even if it's you don't understand, it's like a 10-year-old. If you could personify this, it is young. Even us being able to trade like we are, you used to have to go to Edward Jones or, you'd have to walk inside the actual building. Not just Edward Jones, but you had to go to like a physical building, a physical broker. Take advantage. We doing this shit on our cell phones right now. Now, support and resistance. The price will always move off an imaginary floor, and it'll move up to an imaginary ceiling, and it'll stop at that top level and it'll fall back down to the floor. If you can get in at the floor and get out when it gets to the ceiling, you can make a lot of fucking money. If you can get in at the ceiling and take it down to the floor, you can make a lot of fucking money. But if you get in at the ceiling thinking it's about to go to the floor and it keeps going up and creates another ceiling, you lose your money. You get in at the floor and it goes lower, you lose your money. Especially when you got in at the floor thinking it was about to go up. And when you don't have a protection set up, like a safety net, a stop loss, meaning, okay, coach, you said if I get in at the bottom of the mountain and take it to the top of the mountain, coach, I'm going to make a lot of money. Yeah, I did. But I also told you to put a safety net down there just in case the price don't go to the top of the mountain and the price actually goes down. At what point do you admit you're wrong? And you have to have a safety net there, a stop loss to say, hey, I'm going to get out right here if I'm wrong. I'm going to teach y'all how to do technical analysis real quick before I cut out. Stay tuned. We finna go over technical analysis real quick. We're going to use Flutter. This is still Flutter Entertainment. The other one we was just using was DraftKings. This is Flutter Entertainment, okay? Remember, this shit is not about predicting the price, okay? You don't want to say, hey, it do look like it's going to 313 and I'm going to predict that. On My Mama says, don't buy the lotto ticket. Buy stocks in the company you selling to lotto tickets. You will always win. Selling the lotto tickets. That's right. Now, if you came here looking for me to give you fish instead of learning how to fish, you in the wrong spot. The charts don't tell the future, ladies and gentlemen. The charts show you who is in control right now. Your job is not certainty, it is risk control. Technical analysis is probability management, not fortune telling. Okay? Now, Flutter, this is a parent company. They own FanDuel. They own other betting platforms. They make money from volume. We make money from volume and behavior, not from guessing the outcomes. So we want to pay attention. All right? Sports bettors, they try to beat the odds. Flutter, they set the odds. Do you understand? The sports bettors, they lose against the odds. They try to beat the odds, but Flutter are the ones who set the odds. We make money from Flutter because the sports bettors lose their fucking money. So as long as they gambling, get some of your money back. Ladies and gentlemen, ladies, if your boyfriend won't stop fucking gambling, he losing all the money in FanDuel, and he done bet the goddamn rent money and all this shit on a parlay, and he won't get the fuck off the parlays, go ahead and invest with Flutter. Now, a tailwind. I want you to understand what a business tailwind is. A tailwind is something pushing the business forward without effort. Okay? The fact that gambling on a mobile app and it became legal, that was a tailwind. We use fundamentals to decide what we are willing to own. We use charts to decide when. I'm going to say that again. We use fundamentals to decide what we are willing to own, but we use the chart, the candlestick chart, to decide when. This bridges into technical analysis. All right. So what price actually is? Every candle is a vote. Buyers vote up, sellers vote down. The chart is a fucking scoreboard. This is not Twitter. This is not headlines. You literally need to be able to define a trend. You need to be able to see if the price is going up or is it going down? Is it in an uptrend or is it in a downtrend? Is it in a reversal? Is it going sideways? It can only do one or three things. It's only going up or down or sideways. There's two different types of sideways. There's the sideways right before it goes up and the sideways right before it goes down. They are different. Accumulation is different than distribution. All right. So now, a trend is simply the direction that the price has been moving over time. Can anybody in the chat tell me, are we in a downtrend or are we in an uptrend? right now on this symbol. This ticker, Christina Chance, is called Flutter, FLUT. I was just telling all these gambling ass people that are in the live that instead of them gambling, they should be part owners of the actual company that they are gambling on. Or the platform is owned by this company. They gamble on FanDuel. They gamble on DraftKings, but they don't own any DraftKings shares. They don't own any Flutter. You're welcome. FLUT. So I want you to pay attention to the trend. Currently, it's in the uptrend. E-Man, you are correct. It bottomed at 189. It hit a floor. That floor is known as support. So there is a level of support there at 189. And the price rose from that level. Instead of it creating a lower low, it created higher lows. Instead of it creating a lower high, we starting to get some higher lows and some higher highs. So whenever you see higher highs and higher lows, it's an uptrend. If you see lower highs and lower lows, it's a downtrend. Right now, the chart is not necessarily in an uptrend. You know, that's just an observation. It can continue to go down from where it's at, but it did break structure. Okay. So we want to look at the moving averages. Those are the yellow. That's the yellow line, the purple line, and the blue line that's going through the candlesticks. A moving average is the average price over a period of time. I'm using the 9, the 50, and the 200. That's 9 days, 50 days, 200 days. Where was the price the past 200 days? Where was the price in the average of the past 200, right? It's an average. Go back to school if you don't know how to come up with the average. I'm not being funny. I'm serious. I could teach you, but not right now. Now, I'm going to explain each one. The 9 EMA, that is the blue. That's the blue line. Okay. The blue line that you see going through the candlesticks. That is my short term. I get to know what the short term emotion on this is. Like, and this is for traders. Traders pay attention to that because it changes fast. The 50 EMA. EMA stands for exponential moving average. The 50 EMA is my intermediate trend. This is where institutions start paying attention. Okay. Notice that last time the price got there, it pretty much went up from there. And then the 200 EMA, we look at, that's the purple line. Okay. So the 200 EMA is going to show me this is my long-term control line. And whenever price is above it, it's generally healthy. Whenever price is below it, you want to pay attention. This is a caution zone. So if price moves, if the price is above the moving averages, if price is above all 3 moving averages, the buyers are in control. If the price is below all 3 moving averages, the sellers are in control. So moving averages don't cause price, they reveal behavior. G says, I'm lost. I have no clue, but I'm listening. G, we are going over an indicator called EMA. EMA means exponential moving averages. An indicator is just something that's helping you indicate something, right? It's simple. I'm telling you what the squiggly lines on the chart mean. The red lines mean the price went down. The green lines mean the price went up. They are vertical bars, actually. You just can't see them because they squish together. Those are candlesticks. A candlestick has 4 parts to it, G. The open, the close, the high, and the low, G. You understand? When you're looking at the price, when you're looking at these candlesticks, they going up and down, up and down. When it go down to a certain point and it stop going down, G, that's support. When it go up and it stop going up, G, that's your resistance. The EMAs are fucking footprints to show you where the price was usually during that time period. So if it's a 9 EMA, this is the 9 days. The previous 9 days, the price was here. And it help you smooth the price out because the price going up and down, up and down. You need this shit to be smoothed out. And they act as dynamic levels of support and resistance, aka floors and ceilings, aka levels that the price gonna bounce off of, you know. Simple as that. Do you still confused, G? Support is not a magic floor. It is an area where selling pressure slows down. Resistance is where buying runs out. They can't buy no more. They done stopped and the price shut down. what would you set a stop loss at for FLUT? Well, Christina, I would buy FLUT. I would buy it and hold it. And you know, I want to buy as much as I can before it get back up to 313 or more. Because the next leg up, it could be more depending on the future of sports betting. But if I was trading options on this and I wanted to say that it was going to go back up to $250 at least, right? Okay, so if my stop loss, if I entered here, would be to, let's say, 215. It also depends on how much you're willing to lose. But I know that if it go to 215, I was wrong. And I need to just get the fuck out the trade. Can you say that again about support and resistance? Of course. Support is an area where selling pressure slows down. So we treat support as the floor. Right here, I got support marked at 189 because that is the level that the price fell down to and it bounced off of it like a floor. I got 313 level marked because that is the price where that's the level where the price came up to, and it wouldn't go no higher than that. That's resistance. I'd always use this kitty ass analogy, but it works. It helps people understand. You take a bouncy ball and you bounce it in the house really hard. It hits the floor. It hits the ceiling. It hits the floor. It hits the ceiling. Where is it going to go next after it hits the ceiling? And after it hits the floor, where is it going to go? That is support and resistance in a nutshell. If the price hits resistance and doesn't break above resistance, it'll more than likely go back down to support. Not guaranteed, but this is support and resistance in a nutshell. These levels are zones. All right. So if support breaks, your idea is wrong, and being wrong is okay. Staying wrong is not. Staying wrong is expensive. Being wrong is allowed. Staying wrong is expensive. You can get the fuck out the trade. Support is that red bottom dotted line, and resistance is the top dotted line, the top red dotted line. Exactly. But there are levels of support and resistance within the levels of support and resistance. The buyers and sellers are playing tug of war, ladies and gentlemen. When the buyers win, it go up. When the sellers win, it go down. Sometimes there's so much tug of war going on that it just goes sideways. It don't go up or down. You don't want to be in on those moments unless you're in some type of a strategy that allows you to benefit off of consolidation, like a spread or something. Other than that, you want to get in at 189 and take it up to 313. Right next door to it, is it Shani or Shani or Shanice? It's Shanice. See how I read that shit wrong? It's Shanice XXO. Yeah, I'm right next door to it, G-Ball. On Fulton Gray. Shanice. On Fulton. I'm right next door to it. But yeah, I just want y'all to pay attention to, so I got to follow when you heard me say that. That's fucked up, Shanice. You didn't follow me because you thought I was from the rack. Damn. All right. No, I'm just talking shit. But look, we know that resistance is, where they done stop the buyers from it going up. So look at the 190 zone right here. Look at this 189 level that I got marked. This is where the sellers tried to push the price lower, but they failed. Now, the levels are zones. It don't got to be an exact, 189 ain't the exact level. Like 195 to 189 is the zone that you want to pay attention to. It's going to bounce from that zone. On an intraday level, this shit can go up and down within that zone for a couple of days before it actually break out. But when it break out, man, you can make a lot of money from the price going from 189 to 195 or from 189 to 210 or from 189 to 220. That's a lot of money. But for those that got in at 189 and stayed in through all the red days, they took it and rolled it all the way to 313. But one red candle can scare the fuck out you if you don't know what you're doing. But let's say you got in at 189. If the price goes below that, your idea is wrong. And remember, it's okay to be wrong, but it ain't okay to be wrong if you're going to stay wrong. You're going to be fucked up in the game. You're going to see. You're going to learn the hard way. You're going to learn the hard way. And then I'm going to talk about momentum. A lot of people, they fuck this part up, but you won't. You ain't going to fuck it up. Momentum is the speed of price movement. It's like, momentum is taking the ball at the top of a big ass hill and rolling it down this big ass hill versus the person that's taking the ball and rolling it down a short hill. One of those hills has more momentum. I hope that helped y'all understand. So we're going to look at the MACD. The MACD is another indicator, G. So look at, and Shanice, when I said G, I was talking to somebody in the chat. Their name was G, and he said he was confused. So yeah, that's really why I was saying it. But I am in Indiana, next door to them. I'm not from Chicago though. But yeah, just to be clear, I ain't want you to think I was from Chicago. Yeah, no, I ain't from that. But I got a lot of folk from there though, on the south side or whatnot. I got some people in Harvey, Maryville, the suburbs and shit. Out west too. But I ain't gonna talk about they dirty ass. What you think about Ethereum right now? I think that all of them are at a level where you need to be really buying and don't sleep on it. Don't look at crypto right now. All of them. Don't look at the altcoins and none of that shit. Like, you don't sleep on them. Go back in history. Look what happened this time last year with XRP. And you getting me off topic too, but go look at what happened to a lot of them stocks. I mean, not stocks, sorry. A lot of those cryptos was cheap as fuck. Bitcoin had a run up. Then the altcoins had a run up, a bull market, right? A bull run. And then even the meme coins had a bull run. Yeah, Apple user. But listen though, hear me out. The MACD, the moving average convergence divergence. That's what the MACD stand for. If you look at the bottom of this chart, you will see where it say MACD. That is the MACD indicator. This is going to help you out with momentum. It compares fast price versus slow price. When it turns up, the momentum is improving. When it turns down, the momentum is fading. All right. So the momentum is going to change before the trend change, even though this is a lagging indicator. Right. What up, Joseph? Josana? or Hosanna Hector? I don't know. I be butchering. I be fucking y'all names up something serious, boy. I'm telling you. But look though, whenever the MACD turned down, the momentum is fading. Thank you for coming through, showing love. You came through. You're a high quality viewer. I appreciate it. Looking out. Now, momentum gives you permission to watch, not permission to buy. If you hear me out on that one thing right there, that's going to save your account. Okay? So I want y'all to know that every time you're doing technical analysis, you're going to look for the trend. For now on, I done taught you how to look for the trend. You're going to see if you're in an uptrend or a downtrend. You're going to see where the buyers are proven at. What I mean by proven, these are levels where every time it got to this level, it shot up from there. Does this match my time frame? Okay? I'm staying in this trade. I think it's going to happen in a month. So if I think it's going to happen in a month, I need to look back the past 2 months, at least. I know I need to look back the past 2-3 months if I think it's going to take a month for my trade to happen. But if I think it's going to take a day for my trade to happen, why the fuck am I on a 6-month time frame? And if I'm going to be day trading, why the fuck am I on a 5-year chart? So people don't have to ask me questions like, hey, what time frame should I be on? Well, if you're going to be in a trade for fucking more than a day or more than a week, why are you on a 1-minute time frame? You use a smaller time frame for entries and exits. Y'all homework, y'all homework is to open up a chart. Tomorrow, y'all better inbox me, screenshot me your favorite stock or any stock. I want you to mark support and resistance on that stock. If you don't do your homework, you fail my class and I don't want to ever see your ass in my live. And don't do your homework if you want to. I'm going to send your ass to the administration office and I'm going to tell you about. So find a stock, support. If y'all, this is for my rookies. You need to mark support and resistance on it. I want you to identify the trend, right? Let me know what the trend is. You can even add an indicator on there. like the moving averages. Set your moving averages up if you want to. If not, that's fine. But I need you to be able to tell me if that stock is in an uptrend or a downtrend. Where is support and resistance on any time frame that you choose? But I want you to be able to tell me who's in control and why. That'll help you out. Fuck no, David. I would buy more. But it also depends, David. David asked a good question. If I had $5,000 in HIMS, would I sell? Well, the question is this. If I had $5,000 and I put the whole $5,000 into HIMS, then I would be asking a question like that. Hell, people ask a question like that if they had $7,000 and they put $5,000 into HIMS. But my point is, it sounds like you over leveraged. If you did not over leverage, then you have no reason to sell, especially not a company like HIMS, not a company that is like they own the new Viagra, you know? They own other shit too, you know. I have 15K just now. So if I got $15,000, I'm not putting 5,000 into one stock. You understand? You feel me? Do that make sense, David? I'm helping you out here, brother. So I would downsize, but not all at once. But I would diversify my portfolio. This is not financial advice. This is for educational purposes only. Do that make sense? If you only got 15, if I only got 3/4, I'm not putting 1/4. Like, just make it make sense, bro. You know? You make it make sense, man. Yeah, thank you, David. I'm glad you understand. Do the EMAs and MACD work on all time frames? Yes. Just remember, it is a lagging indicator. Shanice says risk management. Correct. Ain't nothing more important than managing the risk. If you do that, you can lose more times than you win, and you can still be profitable. Apple user 25864926 says, I be going all in, bro. I'm telling you not to do that, bro. And I'm going to tell you why you don't want to do that, bro. I'm going to explain what Shanice said, the risk management aspect of it, right? If you, let's say you lose, let's say you only risking, let's put it this way. Let's say you lose $1 on every trade that you lose. I know this is a hypothetical. Let's say you lose 6 trades in a row and you lost $6, $1 on each trade. Now, the last 4 trades, you make $3 on each one of those trades. Well, the funny thing is, you lost 6 of them. You lost 6 trades in a fucking row. And then you turned around and won 2 trades that made the money back for the ones you lost. Then you won another trade. So you won 3 trades, lost 6, and somehow made more money than you lost. Scratch your head on that one, because that's probability, buddy. That is what you want. That's risk to reward ratio right there. When you can understand that part of math, it don't matter how many times you lose. You down 2K-ish. Well, we're going to get it back, David. But we're not going to revenge trade, right? So when we say shit like get it back, it give you the aspect of being in the mindset of revenge trading, right? We don't do that. When you lose money, don't think about getting it back, because the money that you make ain't even going to be the money you lost. You lost that money. That shit gone. You can lose $2,000 and be so fucked up on making that $2,000 back. Or you can, let's put it this way. You can have $30,000 and now you ain't got that 30,000 no more, and you walking around crying about that 30,000 instead of you just fucking focusing on making 80, making 100, making 20, and you crying about what didn't go right when you had that shit. Focus on the future. Don't revenge trade. Don't try to make back what you lost. So what? You lost 2. You finna make 5. But I pulled up Flutter Entertainment. This was the talk of the town right here, because everybody want to be sports bettors and shit. But do you own any of the company that you betting on? You betting on this platform, FanDuel, and it's owned by Flutter. Make it make sense. Somebody says, anytime I lose, the day is over. I only practice winning. Yeah, and I take 3 of them. I take 3 losses back to back if I have to. Now I know I'm going in the wrong direction. Cool, I'm done. I go outside. Because I know my 3 losses is going to be small. I'm taking a 1% loss, 2% loss, no more than a 5% loss. That way, if I lose 7 times in a row, it only take 2 to 3 30% winners, 20% winners to wipe out fucking 7 losses. I'm telling you, because this is math. This is not guessing. These are facts. I guess I don't talk about risk to reward ratio enough. Yeah, I don't talk about this shit enough. Hold on. Yeah, I don't talk about this shit enough. Hold on. Hold on. Talk about this shit enough. Hold on. There we go. 1 to 3. We setting up for the Christmas rally. Yes, we are. 1 to 3. Risk to reward ratio. Win. Look at the last row where it says 1 to 3. Look to the right where it says win rate required for you to break even. 26%. So that means if I'm using a 1-to-1 ratio, I'm risking $100 to make $100. That means every time I lose a trade, I'm losing $100. And then every time I make a trade, I'm making $100. You would have to win 51 times and lose 49 times out of 100 in order for you to walk away profitable. Steve Duran says, hey man, thanks a lot for the live. I'm finding your channel to be one of the best out there. Steve Duran, man. Hey, what you trying to get? You trying to get something? What you want? You want something? You feel me? Because I promise you, the compliments are rare. The acknowledgement, I don't get it a lot, Steve. I appreciate it, buddy. You know, if you need anything from me, you inbox me and I got you, pal. Y'all see that? It don't take much to get shit from me. That's all it took. And I'm ready to tell him everything in my portfolio. You know what I'm saying? Because he on point. But no, thank you. I do my best, Steve. I do my best, buddy. But I want people to know this, though, because if you like the 1 to 3, if I'm risking $1,000 to make 3,000, I know that's crazy as fuck. You don't want to do that. But anyways, let's say I'm risking 1,000 to make 3,000. If I did that every trade, because I got money like that, right? Let's say I do that every trade. I only have to win 26 times and I can lose 74 times out of 100 and still be profitable. That's the power of risk to reward ratios and making sure that you understand risk management. Also, if you only got $1,000, you should not be putting $1,000 on the trade. I mean, literally, if I only got 1K, I shouldn't be taking $100 per trade. I only got 10 trades out of that, 100. Just do the math. You only got $1,000. Why are you putting $100 on each options trade? Now, if you lose it, you only got 10 times to trade. But if you knock it down to $10, which I know is hard to do, which means you shouldn't be trading options. But let's say you do $10 at a time and you got 1,000, you can live to trade another day. I found that almost every time I see the 1.6 level, the Fibonacci level, that 1-to-1 is there. Your thoughts? Well, that's different. That's dealing with ratio as well, buddy. So are you using the Fibonacci retracement tool in NDN Soul? Are you using the Fibonacci retracement tool? Is that what you're asking about? Anyways, y'all be safe today out there in the market because this is the end of the year. Let me see where shit at right now real quick. But yeah, we at the end of the year. Like I said, people are closing their positions for tax purposes though. So you will see a dip right about now because people they want to get ready for tax time, and they want to make sure that they can offset some of those capital gains and the losses as well. So that's what y'all see in the market right now. But be careful today. Be very careful. But somebody said the whole market is dipping. I think it was JoJo. She came in here and said the whole market is dipping. I don't really see it. I don't see it, but I know that we'll gap down. I do see us gapping down real bad today when we open up. What y'all think? Are y'all bullish or bearish for today? Y'all think we going up or down today? What y'all think? Also, let me know what city and state you listening in from. We doing seminars. I got 8 of them already set for this upcoming year. We in Atlanta, Virginia. We got shows in Jersey. Seminars coming to your city. So let me know what city and state you in. We got financial literacy master classes coming out to you. We teaching people how to day trade, swing trade, stock options and futures, long-term and short-term invest in the stock market and for crypto as well. And you also get a financial literacy masterclass at the end of the seminar where we teach you how to use a trust, how to get insurance and put the insurance in the trust, how to get a will if you need it, how to get assets, protect the assets, and pass them down. If you're interested, I just need you to tell me what city and state you in. That's all you got to do. Where you listening? Where you listening from? So I can know, okay, well, we got a lot of people there. We got a lot of people there. Rep your city. Y'all weak as hell. Rep your city. It's 6 a.m. Y'all got to be hyped. Y'all want the money to come to you. Wake up, wake up. Indy in the building. Okay, 3-1. We got Indy in the building. Post Road. Connecticut in the building. A-Town in the building. Zone 4, stand up. Okay. OKC in the house. This is what I'm talking about. Thank y'all. North Alabama in the building. We got traders all across the nation. These are money makers that you see in the chat, ladies and gentlemen. Charlotte, North Carolina. Okay. Well, if y'all are interested in the seminar, when I come to your city, inbox me. I'm going to get you on the wait list. We also got tax time coming, and I just taught y'all how this year they allowing us to make money or write off some of the shit that we lost in the crypto space. You don't have a tax advisor, inbox me. If you don't have an investment account, that means you ain't got no account where your money is making money for you. You working way too fucking hard. Oh, you working way too hard. You working hard, twin. I'm trying to get you off the clock. Not trying. We gonna get you off the clock, but it requires a plan. Proper preparation prevents poor performance. And if you fail to plan, then you plan to fail. So we need to devise you a plan to get you the fuck off the clock. You want to retire, right? Or do you want to retire like them old ass financial advisors used to tell they old ass clients that they had to retire when they 60? That old ass way of living, like, oh, you're going to retire when you 62, 75, or y'all can retire whenever the fuck y'all want to, but that ain't the way to live no more. My generation, we know that popping up at retirement, any age over 60 with anything fucking less than 2 million is not where it's at no more. You know, people, you cannot go to work in the hopes and dreams that you will retire over 60 with $1 million and think that that'll be enough. You're going to probably end up with a budget of $2,000 a month into the future with inflation. That ain't going to be what you think. You should be, but if you prepare right now, like literally on a consistent level, the question is not what to buy. The question is, are you buying on a regular basis? Are you buying on a regular basis? That's what you need to be asking yourself. Not what to buy. Dollar cost averaging. Dollar cost averaging. That means I'm buying whether this shit up or down. Yeah, I'm buying whether it's up or down. And whenever it's down, I'm buying more. And whenever it's up, I'm still buying, but I'm buying a little bit when it's up and I'm buying a lot when it's down. That's called dollar cost averaging. You will reach your goal if you are doing this. If you are not, then you sitting back and you probably working a lot harder than you should be. But if your money is working for you while you sleep, then you don't have to work as much. But if your money not working for you while you sleep, you got to work harder when you woke. Inbox me so we can get you together. Also, why are you building all of these assets if you don't have nothing set up to protect them? So you just building all these, you're gonna make generational wealth and it ain't gonna be fucking generational. It's gonna stop right there with you if you don't have a life insurance policy to pass this shit down, the wealth. If you don't have a trust to put all your assets in and make sure that you decide where they go after you gone, inbox me so I can help you get a trust. A trust usually costs people $5,000 to $6,000. I'm helping you get it for $60. You can't beat that. What are you waiting on? Go into the new year the right way. All my business owner, entrepreneurs, homeowners, you own a lot of crypto, you own a lot of stocks. Let's get it in a trust, okay? Inbox me your name and your number and the best time to call you. If you have a trust, once we get you to trust, before we get you to trust, however you want to do it, we need to get the insurance policy so that once you put the policy in the trust becomes worth the same as the fucking policy. You now have an estate. This is the fastest way to wealth. This is not financial advice. This is financial literacy 101. Put a W in the chat if you're listening, but inbox me your name and your number if you're serious. If you're serious, only if you're serious. That's it. You know, I'm not gonna talk y'all heads off. We making a lot of fucking money this year going into 2026. And if you rock with me at Ironwork Trade and you hit that follow button and you listen to what I say and take advantage, right? The power of execution is real. Knowledge is not power, ladies and gentlemen. Applied knowledge is power. Hit the follow button if you're new here so you don't miss another live. Silver pullback potentially. Potentially. Heavy on the potential part. I'm glad you followed. Hey, I'm new. Inbox me. I give all my new people free 1v1. So you should inbox me your name and your number. I'm locking in. I make a lot of new friends. It's called marketing and advertising and networking. So when you hear me making videos and doing them the way that I'm doing them, I'm doing it to make new friends. I'm advertising to make new friends. I'm networking to make new friends. The way I set up when I do marketing, I'm doing it to make new friends and help families. JoJo says sounding like a straight up professor. I wouldn't say all that, JoJo. I'm flattered. Professor Price, that dude got a ring to it. I'm trying to keep y'all off the payroll. You know what I'm saying? In a good way, though. In a good way. Especially all you young fellas out there. A lot of y'all 25 years old and look just like this. Stop letting this shit stress you out, man. Oh, yeah, JoJo. I will not come on here without doing my homework or my due diligence. You know, I don't want to talk out the side of my neck. Talking about shit I don't know or shit I barely know. Like, that's crazy. But I also like learning. So I listen to people in the comment section as well, which is why I'm asking y'all, why y'all acting like fucking, why y'all acting like Eeyore off Winnie the Pooh right now to me? Why y'all being weird? Why y'all being weird to me? Y'all acting like Eeyore off Winnie the Pooh. Talk to me. What do y'all plan on doing in 2026 different that is going to help you in your portfolio? If you don't have a portfolio, that is what the fuck you going to do different. 2026, you going to start investing. 2026, you are going to start preparing for early retirement or to retire. What does retirement mean, young people? That means I ain't got to work no fucking more. For everybody in the chat, tell me, what is your financial independent number? That is the amount of money that you need to not have to work no more. Don't think about an age. Don't you dare think about a fucking age. Don't you dare tell me when you want to retire. You need to tell me how much money you need to retire. That's what you should be thinking about. And if you've never thought about it, going into 2026, we are going to devise a plan where you think about it and we actually work towards it and create it. In the end, soul, that's easy, buddy. You can create a cash flow now. If you making $6,000 a month in cash flow, you are making the same amount of money as a person that has $1 million in a dividend that's paying them 6% interest. So they living off that interest per month. So you basically living like a person that got $1 million in fucking bank or $1 million liquid cash at that point. But my point is, $1 million ain't shit but $1,000 1,000 times. And people think it's hard to obtain this, but because they don't understand compound interest. Compound interest is where your money makes money for you. And then the money that your money made for you, that money make more money for you. Hit the follow button if you understand. Hit the follow button if you ready for compound interest going into 2026, because that's all you're going to get from hitting the follow button from me is a whole lot of financial literacy 101. You need this on your timeline to go against all the brain rot and shit that be coming across your timeline. And if you would like to, connect further than this live stream, I would expect you to inbox me the best time to call you and your phone number. And I'm going to give everybody in here a free 1v1, right? I got you. If you inbox me your number and the best time to call. Whenever when I used to box, I tell them I give you one for free. You're going to get one for free. You can hit me one time. I'm going to let you get that one for free. After that, I'm on your ass. So no, seriously though. Also, I'm letting everybody in here come in the Discord. Hit the link in the bio. I'm going to get you, and not just the free side. I'm going to let you in the premium for at least a week. If you don't turn up and do what you're supposed to do in that week, I'm going to let you in for free. After that week, I expect you to have been turned up and did what you needed to do to stay there. So hit the link in the bios for you if you want to come in the community and be a part of the community. I'm going to let you in the premium. Let me turn it on real quick. Let me turn this on and make it to where y'all can get the 7-day free trial. But yeah, if you think your life insurance policy is enough, you may be wrong. I'm doing free policy reviews. Yeah, I'm doing free policy reviews. If you think your life insurance policy let's make sure it's good. You don't want to die and then your kids or your loved ones got to find out that it was weak as fuck. It was only 15 grand and it don't cover the mortgage. That's crazy work. Inbox me and let's make sure your shit is together. In a bag. Your shit together. All right. You think that your job, retirement account you think they looking out for you? They don't want you to fucking retire. They gonna make you retire further down the line. All right. And it ain't gonna be as much as you need it to be. So you need a retirement account that you control. Inbox me now. You know what? I'm done telling y'all to inbox me too. I'm about to get ready to pre-market, but I'm getting ready for the pre-market. So I'll catch y'all tomorrow or later on in the day. And if you inbox me, I'll reach out to you today. With that being said, we're going to make Monday, December 29th, twice as good as yesterday, half as good as tomorrow. I appreciate y'all for tuning in. I'll catch y'all again later on. Y'all enjoy y'all day. Y'all ain't got to go home, but y'all got to get the hell out of here. Y'all ain't gonna say shit back. Damn, can I get a holler? I'm all right then, bro. Peace, shoot a bird or something. God damn. I done gave y'all all this game. Y'all can't even say bye to it. Hey. Y'all can't even say bye? Chunk the deuces or something? Okay. All right. You gonna laugh at me, Salmon? All right. I will send you a message, bro. Is you gonna do it or is you gonna say you gonna do it? Is you gonna barbecue or is you gonna live? I'm just playing. Nah, for real though, inbox me, man. Don't say you're going to do it and then I don't never hear from you. People inbox me and then I never hear from them. That's crazy work. Then they just, pimp off into the darkness while I pimp off into the sunset. That's how we going to look at that. You have to inbox me and you have to stand on it. Okay? Be about your business now. Be about your business. All right, y'all. Good day. Good day.